inaccurate listings. And this is a big one. We'll see, 3-bedroom houses or 4-bedroom houses where really it's 1 bedroom shy and it's technically like a bonus room. The bedroom might not have the proper windows, proper egress. They might have put on an addition, right? That's not legal. They might list a 2-bedroom or a 2-bathroom as a 1.5 when it's really a 1.5. That could potentially kill a deal, right? And now it goes back to appraisal. It all circles around. The biggest one I see today too, and I don't think we commented much on this, Seth, but insurance issues, right? And insurance, especially, I know a lot of people. Here's a great thing. I love to hear it. Whenever I go out of town, out of the country too, people always like, yeah, I want to invest in Texas, in Florida. And I'm always like, why? Right? They want to invest in Miami because it's sexy. Texas is sexy. But the insurance is out the roof, right? Flood, like you got flood insurance, you got hurricane insurance, if you can even get insurance, right? A lot of people are selling their properties right now because they can't get insurance on it, right? And so for an unexperienced investor, they might buy something, oh, this is a great deal, buy it, and then go to get insurance and find out insurance is 6 times what they thought it was. We've heard of insurances. I know Triple H isn't on. His insurance doubled, right? He went from $1,700 to $3,400. And he's not even in those areas. So imagine somebody that's living in Florida or Texas or California. I know not many people want to invest in California, but you can't get insurance even. So you go spend all this money and now you have this asset that becomes kind of like a liability. If you can't insure it, you're going to have to self-insure.
Flood insurance is huge. We had a deal a couple of years ago, and just a corner, it was on like a 2-acre lot. And actually the house was on the west side of this lot, and a very small corner on the northeast side of this lot was a part of a flood zone. Well, according to the insurance carriers and everybody that we talked to, because any portion of that parcel was in the flood zone, it required flood insurance, even though the residence itself didn't, have any worries of ever being, flooded or need any protections. And it actually, when we went to go sell that property as a flip, at that time with those insurance rates, it was about $180 to $200 more on the mortgage payment for our end buyer. So the affordability for that house really changed, right? Whether you're doing it as a rental and you take that on and take it out of your cash flow, or you're doing a flip, that goes to your end buyer, and that's going to affect their affordability to buy that house.
And here's the deal. People don't buy houses based on a price. They buy it based on affordability.
100%.
That's the biggest key to it, right? Especially when you get into flips. Remember, people buy it based on affordability. Unless you get to the higher end stuff, once you get over like this, I'd say a 500 to 700, people buy it because they want it. But for the most part, it's the affordability of it. Ali said, why are they making these sudden changes? Why aren't they trying to support housing? Yeah, insurance is tricky. Insurance is tricky. Insurance is a company. They want profit. I mean, at the end of the day, they own profit to their shareholders. So, and I actually saw some insurance companies actually for like some of the first time in like history actually paid out more than they've taken in. And they're predicting it to only get worse. So what do they do? It's a business. At the end of the day, they're going to raise prices. It may become unaffordable for some. And a lot of times we don't hear these stories about people who, and I just saw it. I felt bad for this guy. I looked at a property about 2 months ago. The property was burned. It was a fire property. And he said, I just canceled my insurance. I had my insurance for 20 years. House was paid off. I just canceled my insurance because it had become so expensive. They raised my rate by $400 and I couldn't afford it. On a fixed income, what do you do at that point? And so these are the stories that we don't really hear enough about, but it affects everybody. It affects investors. It affects mom and pop. It affects everybody. So just something that we want to bring to your attention on this call, because hopefully it'll bring you value. Finally, communication or lack thereof, I think, is the biggest deal killer. I know Maria's on. She's kind of been going through that issue Maria, if it was me, you have really good deals, but to somebody, if the deal wasn't that good, I might walk, right? The communication has been thus far terrible. Most people might walk. You have great deals though, so you'd be silly to walk. I think I would figure it out, but for the average person, they may walk. So
it's called patience.
What'd you say?
It's called patience, and like you stated, it's taking the emotion out of it.
Okay.
Yeah. Numbers
that's very true, because somebody with a lot of emotion be like, this person is avoiding me and I'm sick and tired of them and this is nonsense, this is BS, and they might have walked.
Yeah.
But your patience might be what gets you to the end of the finish line. And guess what? With your patience, if this guy has any other property, guess what he's going to do? He's going to sell it to you.
Yeah. So one thing that I think I've learned from this is taking the emotion out of it, which it has been hard. Don't get me wrong, it has been hard, but strictly looking at the numbers, and I don't know how many times I've looked at the numbers to make sure that it's right, but strictly just taking the emotion out of it and looking at your numbers to make sure it makes sense for you.
Yeah. You're going to look at your numbers until you get to the closing table, and then after that, you're going to look at your numbers even more, because now it's your money at that point. So it never stops. I look at my numbers every month, every other month. I'm looking at it to figure out how can I be better, how can I be more efficient. I get numbers from my bookkeeper. How can I be better? How can I be more efficient? Same process. It never changes. Keith said, is there a way around the insurance issue? You can become what's called self-insured, but for a lot of property, it's too expensive. It's too expensive.
A lot of lenders won't require that too. So, or will require that.
Yes.
Well, right. So you got to make sure that you're meeting your lender requirements, or else you're going to get a due clause where they call the note due. Yeah. But if you're paying cash for it, all that stuff, absolutely, you can do the self-insured item, but insurance is there for a reason. What's more important, the best way to work around the insurance is kind of know your numbers up front, do due diligence, have it in, kind of cooked into where your calculator is, and factor that in, and make sure that the deal's still penciled.
And here's the thing about insurance. Insurance is a hedge, right? Insurance is the what if. And most of the time, for most of the stuff, it's when if, right? When will a tenant, independent, especially when you get into those bigger units, my phone, I don't sleep sometimes. I'm like, somebody might burn something down, right? I'll get a big insurance check, but somebody might burn something down. They might forget that they left the stove on, right? It's not a matter of, for me, especially at my scale, it's not a matter of when or like what if, but more like when. And I'll give you an example. I had a tenant, their dog bit somebody, right? My insurance for this building is about $500 to $600 a month. The lawsuit, or what the settlement was for about $150,000, right? My deductible was $1,000. I paid $1,000 out of that $150,000. It made a lot of sense to have insurance, So, for the most part, being like self-insured, I usually don't recommend it, depending on the value of your house. If you have like a lower value house, maybe, but it's just, you're taking on more risk. What if there's an electrical fire? You're gone. You just bought this investment and it's just taken away from you overnight. And I've seen it. And that's something that you will not. I remember when I first got in business, one of my first businesses, I didn't have insurance on it. I did not sleep well at night, and I had nothing to lose really, but I still didn't sleep well. So imagine having this asset that is cash flowing you, making you money from the day you buy it, and you put that on a risk to save a couple dollars. So underwrite the deal from the first place correctly, so that way you don't have to worry about that. Keith, go ahead if you want to ask something.
Yeah, I just wanted to clarify my question. I didn't mean if there's any way around it as far as avoiding it. I mean, like what Seth said, like, is there a way to bake in the numbers as a contingency just in case? You know what I mean? Like, do you inflate? Do you put together a contingency value just in case it goes up? How do you
the best way you want to do it is, one, make sure that you buy a deal that cash flows from the beginning, right? Usually you locked into a term, a year on your insurance. Make sure you vet the area that you're investing in, and you know where you're going to be investing. So example, if I invest in Florida, I know hurricane season's coming. I might have to push higher, right? I want to make sure that I leave some wiggle room in it. I want to get several rates and several quotes, right? I work with insurance brokers. I always recommend everybody work with insurance brokers. Insurance brokers will help you get quotes from different places and kind of give you the real on like, hey, this is the cheapest one. This one has this benefit. You know, putting those in place is a great tool. And I'll give you guys this tip and trick too. Make sure you get income loss protection, right? It'll cost you a couple bucks, but on a rental, get income loss protection. For example, if your house burns down, they might pay for the house to be rebuilt, right? But they won't pay for the income that you'll lose in the interim. And guess what? You still got to pay your mortgage. So that income protection can save you behind, right? If that house burns down, let's say it's $1 million house, it burns down, and your note is $4,000 a month. Well, it might take a year to rebuild that house. You're going to be on the hook for $4,000 a month that full year. Where if you get income protection will kick in. They usually can do $50,000. They'll send you $100,000. They'll write a check. And I've used it. I've had times where I had floods happen, income protection. All right. So that's a good tip and trick for you folks listening. That's your reward for coming today is income protection on your real estate. Huge.
I mean, your insurance broker, the person that you get your insurance from, and they need to be a part of your team, right? Just like if you're working with a realtor or you're working with a wholesaler, or however you're working with whoever your team is, right? And make sure, just like with everything else, that they understand the investment business, because there are products on the insurance side that landlords need to have. There are products that flippers need to have. Same thing with your title companies and stuff like that, right? Like when you're buying these houses, you need to make sure the title insurance or these things that are there. Never buy a house without title insurance. It's the scariest thing in the world.
Yeah. And it's cheap too. What's title insurance? Like $70 or something like that?
Yeah, it's not much. And so many people say, no, I don't get that. I'm only going to own it for a year and this, that, the other. And I know people that have gotten burned for 6 figures plus for not getting title insurance.
Yeah. That's those little nuances, ladies and gentlemen. There's time to save money in real estate, and these are not the shortcuts that you want to take. These messing around with these will cost you a lot of money. I've done it. It's cost me a lot of money. Most people won't share that with you. It has cost me a lot of money. All right. So don't take the shortcuts here. There's other ways to save money. Hopefully we can help you get to that point, but don't shortcut on these. Do not.
I'll tell you, in my business personally, title issues are something that we deal with all the time because we're dealing with all different types of motivated sellers and stuff like that. And I could talk for probably 5 weeks straight on different title issues and stuff like that. But communication, we've actually hired somebody on our team. She's full time, and she probably she's working 40 hours a week. She could probably work 60. We could probably hire another person as a transaction coordinator for our business. That's all her job is to coordinate the transactions between what we're buying, what we're wholesaling, what we're closing on, the whole nine that's going on. And honestly, it's not as many transactions as you would think, but the constant communication that she needs to do to make sure that she's holding all the vendors and all the buyers and all the sellers and lenders and appraisers and everybody accountable to what they're saying that they're going to do, coordinating all that stuff. Her salary is worth our weight in gold for what we put into our business.